Hi, good morning everyone. My name is Mark Liwa Arcamacho, the CEO of ECS Company. My lesson is Lesson 2, the link between planning and controlling. And under of this are the income statement, cash flow statement, balance sheet, and many more. First, definition of terms. Double entry accounting. Accounting strategy of some firms which requires the preparation of two different accounting reports, the internal use and external use. Dual entry, the process of journalizing with debit and credit entries. Liquidity, ability to meet short-term obligation. Control is integrated planning. Planning, it involves a thorough process which is essential to the creation and refinement of a blueprint. In the table, you will see the top-level management, middle-level management, and lower-level management. Pro forma financial statement. It serves as a forecast of the balance sheet, income statement, and cash flow statement in order to make projections. This may be used as an aid to present plans to creditors and future investors, but primarily it is used for internal planning and controlling purposes. The balance sheet. Balance sheet is a financial statement which is defined by most accounting books as the snapshot of any entity's financial condition because it presents the financial balances of a particular period. A equals L plus C. A equals total asset, L liabilities, C capital or owner's equity. In this table, for newly established smaller business organizations with budget constraints, planning and control starts with available dedicated capital which needs monitoring and would serve as the budget with posting entries in the balance sheet as a cash and owner's equity. For example, one who has 500,000 capitalization may have a pro forma entry of the table. At the table, as you can see, the debit cash and credit owner's capital is equal or the same. For this setup, with the assumption that the capital is all in cash, the latter amount may diminish depending on what was spent for. Assuming you would purchase equipment to be used in business amounting to 100,000, you would now have the total amount of capital, which is 500,000, did not change since it was deducted from cash. The pro forma accounting entry, which is asset equal liabilities plus capital, is still intact and balanced on both sides. The presentation on the balance sheet would clearly state what had been the allocation of the capital in its business operation. Income statement is also known as the profit and loss statement, revenue and expenses statement, statement of financial performance, or earnings statement. It displays the costs and expenses charged to recognize revenues in a specific period. It shows whether the company made money or lost money. This is an example of initial pro forma. It shows whether the company made or lost money. Cash flow statement. Cash flow summarizes the inflow and outflow of cash during a given period. Inflow result in providing the firm with sources of funds. Outflow result in cash leaving the firm due to disbursement. Summaries of significant accounting policies and assumptions. The management's intent of preparing the prospective financial statement should be stated and must be mentioned that prospective results may not materialize. It should be clearly stated the assumption used by management based on information that existed at the time the financial statements were prepared. Organizational performance. Organizational productivity is the amount of goods or services produced or output divided by the inputs needed to produce the said output. All organizations and their work units aim to be productive, or they want to produce biggest outputs using the least input. Organizational effectiveness is a measure of the organizational goals, suitability to organizational needs, and how well these said goals are being attained. Other performance controls in organizations. Computer-based control systems are common in many companies today. Managers have easy access to their firm's databases, which could provide meaningful information for performance evaluation. Bureaucratic control makes use of strict rules, regulations, policies, procedures, and orders from formal authority. Clan control is based on compliance with norms, values, expected behavior related to the firm's organizational culture, and other cultural variables of the country where the company is located. And that's all. Thank you.